January. It's about that time again. Yeah, 8:16 here this morning. Oh, before I get to our guest here, I have to get to our winter storm warning. Still remaining in effect until 12 noon here today. Looking for about another accumulation of about 3 inches or so here today. Well, without further ado, we're going to get into things here this morning with our guest. I told you he was going to be here. Don Wollersheim is here. Don, it's just about tax time again. Good to see you. I haven't seen you in a while.
Good morning. Thank you. Yes,
Yeah.
It's been a while. It's good to get back in the saddle.
Yeah, well, I was going to say, what have you been doing with yourself?
Just flaking off.
You might as well, because you have a very, very busy time coming up. This is the time of the year that has you and others like you jumping.
And this one is exceptionally interesting because of the new tax laws. So many things have changed. Difficult to get help from the IRS.
And there's some new things here for 2019 that we're
There's
going to be
new
looking
things
at.
here. Yes, there are a few.
There's the government shutdown too, and all of that dealings. We can get to that here in just a little bit. But new things for 2018. What are we looking at as far as changes?
Well, the one that's going to hit most of the people is going to be the change in the standard deduction.
Okay.
And that is going to have a larger effect on people who itemized deductions in the past. And we have had a decrease in tax rates. So we all should be seeing a lower tax cost. But I think it was in March, the government changed the withholding tables. So on your earnings, you had less money withheld. So the predictions are for this year is that, sorry.
Yeah.
Even though your cost went down, you had paid in less than you did in the normal year. There's a good chance if you were one that was itemizing deductions that you're going to owe when you do your tax return. So people should be prepared. It's such a radical change, you can't just depend on what happened last year.
Right.
So the big change that's going to affect the most number of people would be the standard deduction. There is a radical change. There's a qualified business income deduction. And pretty much what it is for most people who run a business, some rentals, they are going to be able to deduct up to 20% of their business income from their taxable income. That is a major change. Lots of rule changes, regulation changes. In fact, this last weekend, we finally got from the IRS a proposed change that we think is going to be the one that we need to follow for this tax season. So part of our dilemma in doing taxes, sometimes when you have these major changes, you don't know what the rule is. And sometimes it takes a year or two for the IRS even to determine how things are going to be done.
Okay.
So on that one, we've got some help. We were getting a little worried because it came out so late. The format of the 1040 has changed, and I'll get into that a little bit this morning. So if you're doing your own return and you sit down to take a look at it, it will be different.
What are we looking at as far as changes go?
Well, remember when they were debating about passing the bill, they were saying that you could file on a postcard. The 1040 would be you can file on a postcard side. That was a big political.
A big to-do in the
Yes,
political
it
world.
was.
Yeah.
We're gonna make taxes so easy that you can file on a postcard.
Uh-huh.
Well, the 1040 form is the size of a postcard. They were able to do that. Unfortunately, in order to decrease the amount of numbers needed to be reported on that Form 1040, they had to create schedules.
Create schedules. What do you mean by that?
So now you have 6 new schedules. Schedule 1 is for additional income and adjustments. So there wasn't room on the new 1040 to list all of your income. So now they have a new schedule that you can use to report the income that doesn't fit on the short form, on the postcard form.
Oh, well, how convenient.
Yeah, isn't that?
Yeah.
Schedule 2 is a computation of the tax, to calculate your tax, because they don't have form on that new postcard size like they did on the 2-page.
Sure.
To actually do those. Schedule 3 is non-refundable credits. So you get credits like education credits, earned income credits, child care credits. In the past, you could pretty much enter those on the Form 1040.
Mm-hmm.
With the postcard size form, you can't. So now you're going to be adding another page to the form.
This is starting to sound a little less convenient.
Yeah, it's starting to, well, all right, this is the tax simplification.
Mm-hmm.
Schedule 4 is other taxes. You might owe Social Security tax. You might owe penalties on early withdrawal of retirement accounts. You used to be able to do that on the 2-page 1040. No room to do that on the postcard form.
Right.
So now we have another page we can add to the return for those. Schedule 5 is other payments and refundable credits. I mean, wouldn't it be nice to be able to enter on that return the amount of money you've already paid in? Seems like a pretty important item to have on that return, and they just didn't fit on that postcard.
Okay.
Then there's some issues with foreign address, third-party designee. A third-party designee would be, if I do your return, you give the IRS permission to talk to me if I have questions when they're processing that return. So we went from a full 2-page form, to what was promised by Congress, a postcard-sized form. But along with the postcard side, we get 6 pages of schedules.
See how quick and easy this is?
Yeah.
Oh, boy.
So the first thing people are going to see when they're trying to do their return is this new form. I find it very frustrating because I haven't done that many returns yet. I always compare when I do a return. I compare to last year. I do a reasonable check, and I love to see the total, in a logical format. I like to see the total income, the taxable income, the tax, what was paid in, what's the balance due, what's the refund.
Mm-hmm.
In the past, you could look at page 2 of the 1040 and see that at a real quick glance. Now, in order for me to see that, I actually have to look at 5 different pages.
And hopefully they're all in the same place.
No, it's 5 different pages.
Make sure they're clipped together.
Yes. Yeah, so that was a tax simplification. Remember, there's a lot of talk, and I did it myself during the summer, that you don't need, average person who itemizes does not need all this information because they don't need to itemize deductions because the standard deduction went up. Keep in mind that the state of Wisconsin did not change its rules.
Okay.
So if you itemize deductions, if you look at last year's return and you itemize deductions on the state of Wisconsin, you are still going to want to itemize deductions this year. It might not help you on the federal, but it could help you on the state.
Okay.
So that's going to be kind of a catchy thing that we need to watch out for and make sure that we pick up everything that we can. I said the major change was the standard deduction. The question in the past was, you can deduct the greater of your itemized deductions I should back up a little bit. In processing, not only do we have the trials and tribulations of the new tax law, we have the government shutdown.
That's right. I was going to get to that in just a bit here.
Okay,
Can we
good.
Squeeze a break in here?
Sure.
Well, Don, among the new things here for 2019, I guess we could fit the shutdown into that category.
Sort of a new thing, yes.
Yeah.
And every year the IRS is scrambling to get all of their programs and software and equipment ready to handle the returns when they come in.
Mm-hmm.
And this year it was extremely difficult to do that because of the new tax law. A lot of different things had to be changed in their computers.
Okay.
And then to add to that misery is the government shutdown.
Mm-hmm.
The IRS was operating with extremely, extremely limited staff. And that was just during the time when they needed to get programming set up to get the tax season rolling. They originally had announced that they would process returns, but they weren't going to issue refunds. Now, the reason for that is if you electronically file a return, they don't need any employees there to do that.
Mm-hmm.
But they need employees if they're going to issue refunds. So I don't know where it started, but someone in Congress or the White House became concerned that people might get pissed off if you didn't get their refunds to them. So this week they added 45,000 additional, called back 45,000 employees. And the word now is they will start to accept returns on January 28th.
Okay.
So one word of caution, if you do the return today or January 27th, it's going to get processed at the same time. So don't feel like you're really pressured under the gun to get this thing done real quick to get your refund really fast, because it ain't coming fast.
Right.
It'll be after January 28th. They promise that things are going to be rolling out. I found it interesting. They called back 45,000 employees this week. Monday was a holiday.
Yeah. Yeah.
So I don't know. The word from the IRS right now is yes, on January 28th, they are going to be able to process returns. And yes, they will be issuing refunds. And hopefully it's going to stay that way. I think that's all I need for the shutdown.
Okay. That's what we're looking at for the government shutdown then so far.
Yeah.
Yeah.
Other departments, if you're dealing with the IRS on collection issues or processing issues or questions, very, very difficult to get someone to help you.
Yeah.
Because they are extremely way behind. And the fact that they didn't have the employees now the last, 4 weeks, 5 weeks, means everything else is way behind.
Yeah. Yeah, I was going to say, how can they possibly even have everything set to go by a certain time?
Yeah, I always found it interesting. If I was running a government or if I was running a business and had some financial problems, the people who collect my money are the last people I would get rid of.
Well, yeah.
But that's the government. That's what we're dealing with. Okay, I started talking about the itemized deductions. Mm-hmm. The question on itemizing deductions is you can deduct a greater of the standard deduction or the amount that you come up with itemized deductions. And last year, for married filing joint, the standard deduction was $12,000. So you had to have home mortgage interest, real estate taxes, state income taxes, contributions of more than $12,000 before it would help you to itemize. And a good number of people were still able to itemize. They could come up with numbers greater than that. That standard deduction has doubled. This year it is $24,000. So your medical expense, your taxes, state income tax, local property tax, your contributions, your home mortgage interest, miscellaneous business expenses would have to come up with $24,000 before it's going to help you.
Yeah.
Now, one of the problems is with the taxes. The total of income taxes or property taxes cannot be greater than $10,000. So even if you had $20,000 in state income taxes, you can only deduct $10,000. If the maximum is $24,000, that leaves $24,000, at least $14,000 for home mortgage interest and contributions. in the past, you could deduct employee business expenses.
Mm-hmm.
Can't anymore. That was taken away. That's gone.
Business expenses could be anything just that you're spending
Travel
money
away
on
from
for.
home.
Yeah.
Outside salesman, automobile expenses.
Mm-hmm.
Yeah, you cannot deduct any of those. That was a devastating on certain classes of people, like
I would imagine.
over-the-road truckers,
Yeah.
outside salesmen,
Yeah.
construction workers that over the year work away from home.
Constantly driving and driving and driving.
Yeah. Yeah, and you're talking additional taxable income into the $20,000 or more.
Yeah. Yeah, that had to be a killer for them.
Yep. And that is still being debated. There's a lot of politics going on about getting something back for these people, and it really was devastating. Just very hard hitting on certain classes of people.
Yeah.
So if you're doing your own return, you can do a quick check on this. Unless you have extremely high home mortgage interest or extremely high contributions, that's going to exceed $14,000. You most likely are not going to itemize deductions.
Okay.
And that's where I said earlier, if you itemized deductions last year, you might find a balance due on your return because the difference, the benefit itemizing is gone.
Sure.
So it's not going to work in your favor this year. Those standard deductions, basically, who has to file a return, if your income is less than the standard deduction, you don't even have to file a return. So for a single individual, the standard deduction is $12,000. If your income, not counting Social Security, is less than $12,000, you don't even have to file a return. For married filing joint, it's $24,000. And if you think what these numbers mean, it's particularly dealing with the retired people.
Okay.
If you have a husband collecting $20,000 a year of Social Security and a spouse collecting $10,000 a year of Social Security, that's $30,000. If they can make $24,000, added to that, they could total have $54,000 and pay no tax. That's kind of a nice number to look at for people who are looking at retirement or trying to plan out for their retirement years. It makes a significant difference. If you were to make $54,000 and it's in wages, number one, you'd be paying Social Security tax on that.
Mm-hmm.
You'd be paying almost $4,000 in Social Security. You would be paying pretty close to another $3,000 or $4,000 in income taxes. So if you made a married couple filing joint earned income, did not have Social Security, and they make $54,000, they probably would have $7,000 or $8,000 in tax taken off of that.
Okay.
An elderly couple who has Social Security saved at $7,000 or $8,000. That's a big difference. That's spending income of like $600 a month. So that was a class that really were helped by this change in the tax law.
You got it. Yeah. We're going to be back in just a bit. I get another segment with you, Don.
Okay.
Coming up here next time again. And Don, I guess you were talking off the air with me about how patience is going to be a virtue this year in 2019.
It's always a virtue.
Well, sure.
I know people drastically want their refunds.
Mm-hmm.
Be patient. It's not a good idea to get things in too quickly.
Okay.
Number one, this tax software is being tested as we file returns. We will get, before the middle of February, on our tax software in our office, we will get at least 4 or 5 updates to the software, or it's not calculating the return correctly. And if you file right now, it's going to go through because it matches the IRS. And when the IRS changes theirs, everyone else has to. So your return could be filed through not necessarily correctly.
Okay.
Very easy. We see every year someone forgets to report some income.
It happens. Yeah.
I got this W-2 form. These information forms do not have to be out until January 31st. So you may not have them all yet.
Sure.
And if you are doing your return early, waitresses tend to work a lot of different places.
Mm-hmm.
They're very common for them to forget, I forgot I worked a week at that one.
Sure.
So if you are going to file early, make sure that you've got all of your income on that return because all your information forms are not here. There are some dividend and interest with the more sophisticated investment companies that are not due until February 15th.
Okay.
And they will, Edward Jones is one common one. They will issue a 1099 form on January 31st like they're supposed to. And then about February 15th, you're going to get a new form saying, we corrected this. Now, if you filed your tax return, you're going to have to do an amended return. So be patient. Make sure you have everything.
Yeah. Yeah. Don't jump the gun.
I know you want your refund real quick. Be very careful about paying extra for a rapid refund. It's very common. A lot of companies will do this. I can do an agreement with a bank, and I can create a loan, a system where I set up a loan for you. So I do your tax return, and you got $3,000 coming back. I can set up a loan, and I can get your money back in 2 or 3 days.
Okay.
But there's always a charge for that. Make sure you know what that charge is before you end up paying it.
Sure.
I've seen a couple $100. If I electronically file your return, most likely it's going to pop through in less than 2 weeks. $300 or $100, $200 on the $3,000 loan for 2 weeks is an extremely high interest rate.
Yes.
So if you're going to go for a rapid refund, look to see what the charge is going to be.
Okay.
I always advise people when you do your own tax return, compare to last year. It's still a good idea to do that. It's just a little more difficult.
Okay.
Because the numbers are going to be in different places on this year's form. It's not like repeating last year, just go down line by line and see where the differences are. By comparing to last year's return, you kind of remind yourself of what types of income you did have in the past. And most people are very consistent.
Mm-hmm.
You will have a tax return we probably could photocopy every year, except the numbers are a little bit different.
Okay. Sure.
And then every fifth or sixth year you got something changed. So it is a good idea to kind of pull out last year's return and compare to that. But I know it's going to be harder because that form has changed.
Yeah. Yeah.
And then, most importantly, just be patient. That quick refund could cost you a lot of money or a lot of headaches later on if you have to amend.
Can people go and maybe check out the differences between the forms online? Is there some place you can go just to see ahead of time what the differences are?
You can go on www.irs.gov.
Okay.
And click on their website, click individual, and then click forms, and then you can do a search and search for Form 1040.
Okay.
And they'll give you thousands and thousands. Well, they'll give you the full. They'll give you every form that's in that 1040 series. They'll give you the instructions. So yeah, absolutely, you can take a look at them.
Gonna say go on and click on what's new for 2019.
I know our tax software refers to the schedules. When I'm doing your return and I hit something that goes on Schedule 1 on this, my screen, I have to hit Schedule 1. Fortunately, if I hit Schedule 1, it will have lines telling me what information it's looking for.
Okay.
So if you had a child tax credit that goes on Schedule 3, I don't know. I'm going to have to hit Schedule 1, Schedule 2, Schedule 3, and then I see the line with child tax credit. I get it on there.
Okay.
But I'm sure that's how the tax forms that the people use for the free filing, free electronic filing. Also remember, most often, the firms that give you a free electronic filing do not do the state.
Oh, they don't?
No.
No, okay.
The whole industry does this. When we talk implications of transactions for taxes, we answer you in the name of the federal. Never tell you what the state is going to be. And it's just the way we do things, and primarily because the federal is a much higher tax rate. If it's going to cost you 15% compared to 4%,
yeah,
I'm close just by giving you the federal.
Okay.
It's also very difficult to get outside instructions or forms on the state return. Because if I write a book on how to do federal taxes, I got the whole country I can sell it to. If I write a book on how to do Wisconsin tax returns, I can only sell in the state of Wisconsin.
Yeah, right.
So the information for Wisconsin is harder to find.
Okay.
But yeah, absolutely, you can get the forms off the IRS website.
Well, Don, it has been informative as usual. A brand new year, a brand new edition of Tax Time. We're going to be back here next Wednesday as well. And, we're going to be back with more, letting people know about changes for 2019.
Yeah, the good news is there were not a lot of changes to some of the basic things.
Sure.
So like education credits. I mean, we still know how they work. They just different way to put them on the form, but we know how they work. We know what the rules are. We can talk on those issues now as the year goes on.
All right.
Talk about different issues that are specifics that are going to help you do a better tax return.
All right. Well,
thank you.
You got it. Yeah, thanks for stopping by, and we'll see you again next week.
Hopefully no snow.
Hopefully no snow.